Hi, I'm Jim Pierce with Baton Investing. Every day, people like you come to us whenever they realize that their current investment approach just isn't working. We give them an easy-to-use approach that has beaten the S&P 500 by more than 300% since 2003, takes just 30 seconds a month to use, and most importantly will help you achieve your financial dreams. Today we're recommending Chesapeake Energy, the symbol's CHK, which, as its name suggests, is in the oil business. Over the past 9 months, its share price has dropped in half, along with the price of oil, and we think now is the time to buy it as it has become oversold. In fact, it has become so oversold that it earns a perfect score of 100% from our investment strategy based on the book-to-market investor methodology of Joseph Piotroski, who's a college finance professor and has become legendary on Wall Street for his ability to examine financial statements to find companies that are worth more than their current share price suggests. Now, based on Piotroski's approach, here's why we think Chesapeake Energy is oversold and ready to bounce back. Now, as I mentioned, Chesapeake Energy, the symbol CHK, the reason why we call it the book-to-market investor is that Piotroski felt that if you could accurately calculate the book value of a company and then compare it to the market price or market value based on the stock price of a company, you could figure out if there was some unrealized value kind of trapped in that stock price. So the first thing he did was look at the book value of the company compared to its market price to see what that ratio is. And right now for Chesapeake Energy, that's 1.43, meaning that its book value is 43% greater than its market price. That puts it in the top 20% of all companies trading in the United States. So now that it passes that very first and critical test, Piotroski looked at several other variables, and here are three that were critical. One of the questions he asked is, does the company have a positive return on assets? And in this case, Chesapeake has a positive return of 2.68%, passing that test. Another question he asked is, does it have a positive cash flow from operations? And in the case of Chesapeake, it had $4.63 million in positive cash flow from operations, so it passes that test. He also asked if it was increasing its current ratio, that is the amount of its current income to its current debt. In the case of Chesapeake, it has increased or improved its current ratio from less than 1% to 1.27%. So in other words, here's a company whose book value is far greater than its market value and has positive return on assets, positive cash flow, and is improving its current ratio. Nevertheless, the stock has gotten beaten up, along with a lot of other energy stocks, because the price of oil has pretty much dropped in half since July of last year. So right now it's trading right around $15. We think it's a buy up to 18, and if you buy it now, you also pick up a dividend yield of 2.5%. So we're recommending Chesapeake Energy, symbol CHK, up to 18. Now, Chesapeake is one of only 10 stocks that we hold in our current portfolio, and every month we identify the 10 highest scoring stocks out of the more than 6,000 that trade in the United States and rebalance our portfolio accordingly. So if you want to know more about how our system works, just visit batoninvesting.com and click on how it works. There's also a simple 3-question assessment to help you determine if Baton is right for you. We can only help less than half the people who come to us, but maybe you're one of them. So go to batoninvesting.com now, and I'll see you again soon with another free stock pick. Thank you.